Trading Market Technicals Morning Call video for Wednesday, June the 5th. Red across the board. Markets took back from the previous day's gains. Pretty wild price action getting closer to the end of the day. Markets actually sold off. Had a nice little sell-off in the morning session up until about 1 o'clock, 2 o'clock. Then the markets actually started rallying. We were down 112 at one point in the Dow to be down about 20 or so points late afternoon to then sell off, and Dow closed at about 76 points. So red across the board, but very interesting price action here. We are oversold. What I did see and notice on our analysis last night, Russell 2000 NASDAQ did not break their multi-week ranges, but the S&P and the Dow did. And as you noticed in the last several months, really S&P and the Dow has been kind of leading the markets higher, with the main leaders like the Russell and the transports kind of playing catch-up. I mean, there were some leadership transitions and roles that they were playing, but nonetheless, they were kind of lagging behind. The S&P and the Dow did break down from their multi-week ranges. Copper broke above their 7-day high, so that's interesting to see, right? Copper has been lagging. Now copper has been actually turned around. Still within the pen, I'll show that to you as well. And then the McClellan Oscillator. That's what I want to get into right now. Now, we are oversold. No question about it. We are at these oversold areas. I am expecting a bounce. And I am definitely expecting a dead cat bounce. So remember, we could be oversold for days and days. We could sell off the rest of this week before we get some sort of a bounce. Same thing like we were back up in this area here. Remember, we were trading higher for weeks and weeks on end, and all of our oscillators and indicators are through the roof up at areas that we've never seen before. So remember that. Keep that in mind. But as a trader, whether you're a long-term trader, position trader, day trader, or scalper, you want to know that you could be expected for some sort of a bounce at any given time. And that's how you can take advantage of that. Like yesterday, clearly, we knew the markets were lower. We did get that bounce that I was looking for. And when the markets rolled over, it's very easy to go right and sell the index, because you'll know when that time is, when the right time comes. Intraday, you'll say, okay, I know I did get that bounce yesterday, and now I'm looking for a rollover. And if that happens on higher than expected volume, then you know you're going to have an intraday sell-off. Okay, now whatever happens, days and days is really not a factor if you're day trading. But we are down at 84, so I am looking for a bounce. I am definitely looking for a bounce in the coming days. But that bounce should be a dead cat bounce, a weak bounce going into this area. Remember, buyers and dips are still out there. Investors and traders, longer term, obviously, position traders, they're buying dips. I could see it intraday. I could see where stocks are hesitant to go lower. So you got to really be careful. But right now, this is not the time to size up your positions bigger than expected. You want to reduce your share size and just kind of wait for the right moment to come, and then that's when you really want to then put full size on. So right now we see we got down to 84. So I'm looking for this bounce right up in this area here. Negative 50, negative 40. I'm not looking this McClellan Oscillator to really get above zero. So I want to see this coming right back up into this area and then fail. And when that happens and then we get that reversal, that's when we're going to look to short the market in a big way. But until that happens, that might not even happen. Until that happens, you have to stay light with your position size and reduce your risk until that bounces happen. I wouldn't be short the market down here. Now, intraday, it's another story. But if you're looking to position something, now's not the time to be short the market. Okay, take a look at the tick. Tick's still holding above zero. So right now, really, there's no technical damage except the S&P, a little bit in the Dow. But right now, a lot of the indicators are still above zero here. That's the tick. And let me show you the 10-year. 10-year is still holding above the 213, 2.13%, 2.16%. So just really not going anywhere the last couple of days. Take a look at the Nikkei now. The Nikkei is different, right? We had a pretty nasty sell-off. Now, yesterday night, excuse me, because this is from last night. This is not last night. We did get a little bit of a bounce here, and Nikkei was up a little bit last night as well. So remember, risk on, risk off. Nikkei, risk on, risk off. You'll get a good picture. So we're getting a bounce here. Now take a look at copper. Copper looking to break out of this pennant formation. So copper was up, definitely diverging, not a lot, but copper was up, diverging from what equities were doing. So that's also a sign. Even though copper didn't play a leadership role here, you can't just kind of push it off to the side and say, it's not a big deal. you still got to be aware that copper, if copper does break out in a big way on heavier volume here, then you have to be cautious if you're looking to short the market. Got to be very cautious about that. Let's take a look at stocks above the 50-day moving average. They're on a sell signal as well. And as you can see, bullish percent on sell signals a couple weeks back. So they produce some good sell signals. When I mentioned that we're on sell signals on all of our indicators when the market really didn't move yet, which was right about here. I think we get that one little push lower, and then we started going higher again. So we definitely were playing market divergence here, okay? Take a look at the indexes now. So cash below the 20, we're hugging right here at 1634. We did close below it. I think we're going to chop around a little bit here. Our oscillators are unwinding, so we're now getting into some oversold readings. So we just need to be cautious here. Like I said, I'm looking for a bounce to short into. Okay, but we need that reversal on that bounce. Here's the SPY. As you can see, we're breaking down now. We broke down from this pennant formation here. Now we're back below into this uptrend channel. Again, we're still above the 50-day. I think the target's going to be right around here. I think right around the 50-day moving average, 160 will be the first target on this pullback, at least this correction, and then we'll see what happens. More than likely, if we do get a correction down to the 50 and there's nothing earth-shattering out there as far as economic events, indications of any type of geopolitical risk on, risk off, then I think you'll get that bounce, and then we'll probably make new highs from there. But again, we could probably chop around here, getting weak into the summer, and then probably pop up higher again going into the fall, getting ready for that Santa Claus rally late fall. But again, that's a bigger picture. Take a look at the Spider 30-minute, and as you can see here, we did pop higher. We caught that R1, and then we just started to roll over, and that was a real good sign. Right around 10:30, 10:35, 10:50, the market started to sell off, and that was a really, really nice little pop. But again, you see that we did get that push up, and that was that short covering rally again. I think shorts are still a little nervous holding positions, and then we just kind of roll back down again into the close. So I am bearish, and I am definitely looking more bearish. This pullback is looking more bearish, I should say, than any other pullback that we had all year. Okay, so as you can see, look what happens. We're tight here with the candles. Now we get wider and wider, wider and wider, and then all of a sudden we start breaking. Now we broke this pennant formation, so the next stop is going to be this lower trend line in the diamonds. And same thing here. Now we did get this head and shoulders. We got a confirmation. So this is also something to be aware of in the after this bounce subsides. If we do get a bounce and the bounce fails, you're going to know in the back of your mind, the leader, the transports, has a head and shoulders formation, which now triggered. Now, today is going to be interesting to see if we start to pull back. Remember, we're going to have non-farm payrolls come out on Friday. We got ECB and Bank of England rate decision coming out tomorrow. We don't forget, guys, we're in a worldwide market here. So we got global markets here all trading on everybody else's information coming out. So if somebody has a hiccup, we're gonna have a little bit of a sneeze here as well. So we do have a bearish pattern that actually triggered yesterday. Now we just want to see a little follow through today. Now remember, a lot of head and shoulders pattern. Does that mean go out and short the transports? No, not at all. We want to let this possibly maybe test this 50-day moving average again, and then let it bear flag into the neckline. That's what usually happens. You know, now you can take a little here, and then when the markets do come back up again, price retest this 112.30, then you can add. You can do that as well, depending on your trading plan. I like to let it go lower, back test it, fail, and then that's really where I like to get involved. So we do have a head and shoulders. So we need to understand. We need to be aware that we have a bearish pattern on our leader. Okay, and here is the IWMs again. Held the 20-day moving average. So right now, the IWMs are holding up better than most of the sectors that we follow, the 5 sectors that we follow here. Goldman Sachs clearly had a reversal day, but really on fire. And one day really doesn't make a trend here. So Goldman Sachs still holding up well as the banks. XLF here did roll over, but again, sitting above the 20-day, no technical damage again. So banks are holding up relatively well. Apple holding up well again. I heard after hours through the Squawk Box, Samsung got their patent. They got award awarded one of their patents, and that took Apple down about $3 in the after hours. But again, really no big deal. Down $3 on a $400 stock really isn't much to talk about. But again, guys, we still have this inverted head and shoulders, so this pattern is still valid, and we're holding here. As you can see, we're just flatlining. So we're going to decide which is the next big move. It's either going to be a break of 455 to 470, or a break lower to the 418 area, and then we'll reevaluate it. And then just lastly is the Qs. As you can see here, Qs did break lower. However, tech stocks are doing quite well. Microsoft, the Intels, the Texas Instruments, the Clacks, a lot of those semiconductor space is really doing well, and I look at that every night. I look at through all of my sectors, and I see what's green and what's holding up, and they're holding up pretty well. So money seems to be flowing into technology. It's something to take an eye on if you're looking to get long the market instead of being short. Okay, guys, really that's about it. Let's see what happens today and tomorrow. The next 3 days are going to be very interesting. Okay, so remember, we are oversold in the McClellan Oscillator. That is one of our granddaddy, so to speak, indicator, and I always watch looking at that. Down 84 percent reading. You have to be aware that we're going to get some sort of a bounce. So please don't be looking to short the market down here. Wait for a bounce before you enter short. Have a great day. We'll speak to you tomorrow.